Great. Okay. Give the slides up. Yeah, there we go. Okay. Insightful financial health for architectural firms. Thanks, Shelley, for putting this all together and getting the slides and everything. I appreciate it. And welcome to everybody. Thank you for joining in this discussion of how to unlock financial growth for architectural firms. Most, starting out a little few words about the subject, and most architectural firms are not accountants, and they don't really want to be. They shouldn't be, but they but for their firm to survive and provide for the owners, their staff, the related families, it must be financially healthy and ready to grow. And that's a lot of responsibility for a firm owner. I know this can be very stressful for them, and that's where I can help. I'm Scott Walley, CPA, MBA. I help architectural firms by providing fractional CFO services. And what's fractional CFO services, you might wonder? Well, it's helping companies that need financial expertise, but they don't need a full-time CFO. And that's where I can come in and help them in on the financial side and help them improve their processes and grow their company. I've talked to so many architectural firm owners that have stress from the financial part of their business, and it's just nerve-wracking to some of them. And that's where I can help them better understand their numbers so they can make better business decisions. That's what it's all about. And currently, I'm focusing on helping the architectural industry. I find it's very interesting group and niche and very rewarding. Um, a little bit of an overview for today. I know we only have 30 minutes, which will include some a few minutes of Q&A at the end of it. If you have any questions along the way, you can drop them in the chat, and we'll get to them at the end. And if we don't, I'll follow up with you for sure. But I'd like to talk this morning about three things that I find critical to the financial success of an architectural firm and getting them ready and helping them to grow. And one of them is financial statement reviews. There's a critical piece of the puzzle. Another one is project tracking or job costing, to know what's going on in your jobs. And then the last one is projections and forecasts. And we'll see how that can play into helping your firm grow. If these things are implemented, they can bring the financial health you're looking for and also help you to grow and get bigger and make more profit. And that allows the firm owner more clarity, less stress, which is really helpful for them, I find. And it also eliminates some of the issues, like if you've ever wondered, will we have enough cash to cover the next payroll? We want to get away from those and get on to bigger and better things. So and that's kind of what it's all about this morning. And I would start out with the first topic that I mentioned. There's monthly financial statement reviews. And this is really to look and see where the business has been, where it is today and now, and how are you doing? How have you been doing? And there's a number of different parts of the review information. It all starts with the P&L, or also known as the income statement, that you're probably familiar with this piece of it. It's a financial statement that shows your revenues minus your expenses equals your net income or your profit. And it's for a period of time, the P&L. It's for a month, a quarter, a year. What are the financial results of your operation for that period? Um, the second piece of the puzzle a little bit is a balance sheet. It's a little difficult to grasp sometimes. Maybe it talks about the assets, the liabilities, and the owner's equity, the book value of the ownership at any point in time. This is a particular point in time versus the P&L, which is a period of time. Think of the balance sheet at the end of the month. How much cash did you have in your accounts at the end of the month, or how much receivables did you have at that point in time? The third piece of it is a cash flow statement, which is the most critical piece of it all, and but it's somehow sometimes it gets overlooked. It's a little difficult to understand, and people don't really grasp it, so they maybe not worry about it, and they think it more just the P&L tells the whole story, which it really doesn't. You need the cash flow statement. It because, as the old saying goes, cash is king. So you got to know where your cash is and what happened, where it went, and what came in and went out. The the flow of the statement, it starts with the net income from your P&L, and then it gets reconciles it all the way down to the balance of your cash on the balance sheet. So, um, it how much did the cash increase or decrease during the time of a certain period of time, during the month or the quarter or the year? One thing I see quite a bit of sometimes is a firm can have a strong profit but no cash, and they go, it's confusing. Well, our P&L did great, and we have a good bottom line and profit, but we're struggling every time we have to pay payroll. We don't have enough cash, and what's going on? And then that there's a few things that can um, cause that. If you um, buy assets, or you spend money on that, or you increase your AR, you didn't collect the money for the invoices you have, so that it's in the P&L as revenue, but you didn't get the cash, you didn't collect it. Also, if you were to pay down a loan or something, or do owner distributions, that would use the cash up, and then like you said, you may be stuck in being very close to having enough cash for your payroll. You don't want to be that, and the cash flow statements helps you understand what's going on there. Another area of the financial review is key performance indicators, which are KPIs. They're called, and these are metrics for the health of your business. And there's many KPIs out there that you could use. I always recommend limit it to a handful of them that you can really manage, that will really make a difference in your financials. You just don't want to measure something to measure it. You want to have it so you measure it and you can make business decisions of, maybe you want to increase your gross profit margin, the amount of cash, the amount of money that gets to your bottom line of your revenue. If you can increase that percentage, you're going to be more profitable, you'll have more cash, and you'll be able to grow. Um, let's see, some of the other key performance indicators are revenue or expenses per employee, the utilization rate, labor multipliers, what you mark up your labor to break even, how much do you need to mark that up? For this whole financial statement review process, I usually look 13 months in the past monthly, and you can see the the trends. Are they good or bad? Is our revenue creeping up or creeping down? I also do maybe a graph for some of the KPIs that you can see the progress, and how what what direction they're trending is really important. If things are going south, what happened there? And then the last part of the financial statement review a little bit is comparing your numbers to the industry standards for KPIs. What is the architectural industry? What are their margins? What is their net income as a percent of revenue? Then you can see how you're doing compared to your peers and people in your own industry, which is very key. And that'll give you a good barometer of, are we doing well or not, or we thought we were doing well, but everybody else does a lot better, so maybe we're not, or something like that. So, you know, if you were to do monthly financial reviews, I believe, and I've seen it, that over time you would get better at understanding and managing the key areas of your business. And it will be possible you'll be set up to really grow your firm because you've known what's going on in the past. And the the second that brings me to the second part of the things that you need is project tracking, or also known as job costing, and it's a key area of financial health that can be overlooked easily. As you know, architect firms operate by completing projects for clients and charging them for them. But project tracking answers the questions of how much did that project really cost us? How much money did we make on that project? If you ever think about that, it kind of seems we're spending a lot of time on it. I don't know if we're making money or not, or you're working real hard and you're not your net income or gross profit is not very good. God, we're working hard, but we're not making any money. Um, many firm owners struggle to answer these questions of how much did it really cost us. And the project tracking really starts with estimates of your cost and how much you're going to bill to the client. You start out with the real details of your cost, your labor, how many hours is it going to take to do this job, and how much do we pay those people that are doing those jobs, whether employees or subcontractors or also your consultants. What are you going to have to use for consultants? And how much are you going to mark that up? And then after you do that exercise, of course, you'll get the amount that you're going to charge your client, and you're going to know your cost of what it is, and then you're going to know your expected profit. Your invoices you send out minus your cost is your profit of the direct cost and the gross profit on that job. And so you keep that aside, and and then, of course, the other side of it is tracking your actual cost. Some of it's easier than others. The revenue tracking of your actual costs is pretty simple. It's the total of the invoices you sent to the client. That's your revenue. Your expenses are a little more difficult to track, but that really is time and effort well spent once you get a good process in place. The biggest expense to track, of course, is your labor. What's the direct labor for each project? And that gets down to tracking your billable hours for both employees and subcontractors. If you sub out some of the work and not done by your employees, how much did that cost? What did you spend on that? You got to keep track of that. And then the other part of the expenses is your consultants, your reimbursable expenses. Um, how much did you spend on those? And you put all that together. You can assign all your actual costs and your invoices to a project in your accounting system. Most accounting systems do it. QuickBooks Online, some of the other ones, Sage or whatever, Zero, they can all track projects and help you do this. And then you can run a report on your project and see how it went. You get a dollar profit and a margin. What's your margin? A lot of it is percentage of revenue that got to profit. And the other thing is good about doing this exercise is you can also do it. You can run the report along the way when you're in the middle of the project. You can see how are we doing. For example, if you've thinking and looking at it and you think you've done about 50% of the work, but you spent 80% of the dollars, bit of a red flag possibly. And then you can stop there and say, okay, we need to adjust here for the rest of the project so we don't go underwater and spend more than we're getting in revenue. So that's and then the last part of that is the post-mortem review, I call it. Did you take it at the end of the project, you run the reports and you compare the estimate you started with versus your actual income, revenue, and profit. And do we make as much money as we expected? If not, why? Or if we made more, why? And then the other one, you can learn from the estimate versus the actuals of the different line items. For example, labor, you can, if you're always forecasting your estimate is always lower than the actuals, then you kind of ask yourself, why is that? What's going on? Um, and maybe learn from those and get better at estimating. And then it'll help you out for sure in future projects. And the other beauty of it is if you track your project revenue and cost and profit, it's going to let you know which projects and which clients are your most profitable. And those are the ones you want to zero in on. We maybe our residential stuff is a lot more profitable than doing commercial or vice versa or whatever, or these certain types of jobs or certain clients are more profitable. Well, that's where you want to focus, A, on those profitable ones, and B, try to get the other ones up to that profit line and get them to that margin. And if you track all those and you know that, it could very easily lead to growth in your company now that you know what's going on and you can adjust going forward as you go. Um, the last section I'd like to touch on real quick is the projections and forecasts. You know, looking these are looking forward. Where is the company going? Done through budgets, projections, forecasts. Um, what we talked about so far is really looking back. Some of it, especially the financial review, is looking in the past to see what's going on. But now we're looking forward, and you should spend most of your time looking forward and not backward back. You do a little bit of the financial review, understand what's going on, but really dig your head in and your heels in the forecast, because that's going to tell you what's coming down the pipe, which is so important. Um, I usually do a monthly review and update a month by month forecast for either the next 12 or 24 months and figure it out. And then the way you do that is you break it down into starting with the line items of your P&L. When starting at the revenue, what's our revenue going to be each month for the next 12 months? And you should have maybe some math behind it of, or looking at the historical, we've been running an average of this, and so that's, we would like to do 10% higher, and here's how we're going to get 10% higher, and that's your forecast going out. Or some months, the maybe the holidays are a little slower, so those months would be less revenue. And then you go on through your expenses, you go through your cost of goods sold or your direct costs, which are many times a percentage of revenue, and then your overhead costs, which are your administrative costs of your rent and your insurance and your administrative salaries, and you put all those in month by month, and then you get down to the bottom line of your P&L. Now you have a forecasted net income by month for the next 12 or 24 months of what's going on, and then you can see from there, okay, this is good or bad, but that's not the end of the story. You have to go further, like I had mentioned above a little bit, is going from the net income down to really the cash. Remember, cash is king. We're looking at the bottom line of my forecast is my ending cash balance. So you have to adjust the net income for a few things um, that are not on the P&L. Again, for maybe paying back a loan. You've got a loan, and what would it look like if we paid a little bit every month and got it to zero at the end of the year? That's our goal. We're looking at that, and we're looking going out 24 months. Do you buy equipment? Are you going to collect some of your old AR and get that going? Those are all cash flow items that will impact, again, your net cash. And then you get down, like I say, the last line of the projection is your ending cash balance every month, and you can go right along the that bottom line month by month and see what you're expecting your cash to be. And if your cash is getting real low, again, maybe the holiday season or the low season, you have to figure out, okay, I'm identifying that as a potential problem. What are we going to do about it? And go from there. It allows you to make adjustments beforehand. We won't be able to pay down our debt during the holiday season or the end of the year, the winter, or whatever your slow season might be. Or so that lets you go, and then you can see where your growth is. Are you growing the way you desired? To really grow, we need to get more. Maybe you need more revenue in certain. How are we going to do that? We need to start a marketing plan now so we can get more revenue in 3 to 6 months. Um, and it should tie into your goals of your business and personal goals. If you have a goal of getting an additional 5,000 a month for your cash distribution to owners, are you reaching that goal, or are you paying off the loan by December? So that's what you get to. It's the projection is key, and you look at it every month and update and drop your actuals in there that for the past month and go from there. So that's getting to the through the three things I had mentioned and I wanted to get to in this talk here. In a quick summary, the three areas to focus on to bring financial health and growth to your architectural firm. Do the monthly financial statement reviews. Get your project costing and job costing together. There's the processes to make it not as burdensome as you might think it is. And then lastly, sit down and do a monthly projections and forecasts every month to see what's coming down the pipe and adjust it accordingly. See if you're reaching your goals. It does take effort to see it, set this up and monitor it, but it's definitely worth it. And if it's done on a regular basis, you can have less stress and more cash, which is a great way to go. It's a process of never-ending improvement to get to growth. So that's what we're all about. It's only a quick review, but I hope this give you some points to think about to help your firm get better and grow and be more profitable. If you we'll do Q&A here in a minute and see what's out there. But in the meantime, just a note, and Shelley, you can put up the contact information. If anybody would like to have any questions, or if you want to continue the conversation later, you can reach out to me. You can find me here. You can find me on LinkedIn. My email is scott@scottwcpa.com. My website, the same, scottwcpa.com. There's a contact me page there. And so that's what's out there. I hope that helps out. Let's see, what do we have in the chat? I think there might be a one. Is there something in the chat there, Shelley, or what have we got? Any questions? Well, why is it so important for civil engineering firms to do financial reports and financials? Civil engineering, I think it's the same as anybody else. You want to know how profitable you are, and you also want to know how much cash you have in your business and where it went. So, to do the monthly financials tells you how profitable you are. It can, your net income as a percentage of revenues. There's some of those KPIs. I'm sure there's KPIs for your civil engineering firm or whatever. What's important that'll really move that needle. If you do this, and you can see again how profitable you are in the past, looking at your past monthly statements, and then you're projecting forward. How are you looking going forward in the next 12 months? How profitable are you going to be, and are you going to grow? And what are your goals? You start with really your business goals, your personal goals, and grow from there of how really personal goals of what do you need to do the things you want to do in your personal life, how much money you really need, and then your business goals are going to have to be able to be enough to cover those personal needs. And are we going to get there? So I hope that helps. I think that's about it on the questions. I don't. Oh, maybe there's another one here. Let's see. So important. Okay. Well, I think that is just about our time there. Um, I think we're good. Again, like I say, thank you very much for joining. And if you have any follow-up questions, or if you I do free consultations. We can have a quick call to see if this is something that would work for your company. If you're interested, I've had a lot of companies that really have seen dramatic changes in their financials and their cash situations by doing the things I mentioned today and other things, services I can provide or help you learn and grow. No matter where your knowledge is, we can always go up from there. So I think that's about it. Anything else, Shelley? Or
No, I think you are done. Thank you so much for this wonderful webinar. And thank you so much, everyone, for joining us today. We will definitely follow up. And if you will be having any questions, you can ask us, and you have our contact information there. Thank you so much once again, everyone.
and just a quick one. I think you might get a quick little 3 or 4 question survey after this to see how did I do. Was this good information for you? All right. Well, you take care now. Thank you very much.
All right, everyone, take care. Bye bye.
Bye.